on both sides. Then we have the RBI meeting. It's on, I think, February 6th, 7th. Okay. Then we have the FOMC meeting next week. Okay. And then we have the US data, US employment data. So these are all very important set of events in the coming week. And so we could probably expect all these things to have an impact in the market. Already we have had a big impact due to, already now most of you are already in the market, know that the markets have been negatively impacted due to some report on Adani. So I don't want to get into all the other details, fundamental details of what spooked the markets, but reports on Adani Group weighed down on the markets, particularly on the banking stocks. Of course, it had a very negative impact on Adani Group of stocks, but besides that, we have had a very big negative impact on some of the banking stocks. Particularly today, ICICI was down more than 4%, 4.5% down. And we have all the big stocks going down, only except that we have Tata Motors, because of its result, because of its performance by the JLR unit, Tata Motors did well. TCS, of course, was okay. And most of the other stocks literally had, because of the overall market impact, some impact was felt in other stocks. Maybe ITC did well. So only some of the defensive sector was okay. Otherwise, most of the other stocks, including Reliance, was down, and some of the big stocks like ICICI were down in a very significant manner. The greatest impact was felt on what moved the markets in earlier months. It was the Bank Nifty, because if you look at the entire performance of Nifty, it was contributed heavily by the banking sector, because banking sector has around 35% of the weightage approximately, and all the private sector banks, including mainly Axis Bank, ICICI, HDFC Bank, then we had the PSU banks doing extremely well during this particular period. So all this contributed to very heavy movement in Nifty, helping the market to go to 18,800. Okay. Of course, this year, December, it closed at 18,105. Now, as an investor, we look at both as an investor as well as a trader. Now, the investor should look through the noise, because all these developments happened. Because last year it was the Ukraine issue. The year before it was the pandemic issue. Then came the interest rate increases in the last couple of months, 6 months or so. Nevertheless, if you see, even last year, despite so many problems like Ukraine war, very high inflation, uptrend in interest rates, despite that, the markets eked out something like 4.5% gain in Nifty. So this mainly came because of the performance in banking sector. Now we have already highlighted, what you should think is, what is the probability that the market will be above 18,105 by December end for an investor, and where you should invest. You know very well that 18 or 19 out of 23, 24 years, markets have registered a positive close year on year. So that means December 2023 will be higher than December 2022 statistically, which means 18,000, market will be above 18,105 first. Based on the results and other things which will keep flowing right now, expectation is that, as we said earlier about it, that the Nifty EPS could touch 950 or so, and with a PE of 20 itself, it should be 19,000. But with a PE of 22 and all, we should probably look towards something like a 20,000 comfortably. So now, if you're looking at something like a 20,000 in coming period, then below 18,000 means it offers an excellent opportunity to make 12% to 14% return. Even otherwise, let us say the market falls down. So let us say you are a buyer at 17,200. Just hypothetically I'm saying. And next year it closes even a 2-3% gain. It goes to 18,500, let us say, next year close. 1,300 points would have still given you, so even as an investor, you would have got something like 7.5 to 8%, and probably with some capital gain, still this would have been a better than FD. So more or less, you are not going to lose much. So this is the area where the safety starts for a return. So 17,200, and anything below 17,200 you can keep. So on a conservative basis, I'm talking about this. But after that, if the market becomes bullish, probably we could see coming, going to 19,000, 20,000, which will give us a good gain. So as an investor, I think we should look towards something closer to the this particular area of 17,200 levels, or even slightly below if it comes, then you can add to that. Now, how does this look at this translate in the form of technicals? So, as from investment point of view, we have already highlighted that what is the likely PE in going forward. This year they are expecting it to be 825, 835, and after that it's expected to go to 950. So 950 into 20 or 22 translates anything between 19,000 to 20,000. So if you buy anything at 17,200, you are comfortably looking mostly towards a 10% to 15% gain on a year-on-year basis. So I would suggest that you should look definitely towards investment at this place. Now we'll now look at we'll now boil down to we will now look at the stocks also a little later. So we look at the trading, that is the trading cost. What is the expected movement that could happen in February? Now in January we saw the market sandwiched between Nifty. It was a predominantly a 17.8, 18.2. So if you see, most of the time it used to touch 17.8. It also used to touch 18,200 approximately. So this was going on for nearly 5 to 6 weeks. So this is the movement. Now it has broken this 17,800. Now were there signs that were flashing, and why 17,800 is important, and why could you have predicted 18,200, or could you have predicted some sort of a fall earlier? Now these could be definitely done with the help of some technicals. Now we also had opinion that 17,800 could be a very, very strong support. From there it will move up, and the breakdown came only today mainly because of the report on Adani. Now 17,800 marked something like a 38.6% retracement. Normally the Fibonacci ratios which we have done earlier. So we will look at the Nifty index. Now so for time being, I am removing this particular Fibonacci. I am drawing this Fibonacci from this place, from the last year low of 15,200. So that is coming closer to 17,479 to 480. Now the Fibonacci that was drawn from here, now the 38.2% retracement got broken. So that is a very important place. If you see from this place, that is 18,063. And then it fell down to the 50%. That's why I'm saying there's 50% retracement of this particular move is always a very crucial area. And that came closer to 17,810. So we had a movement which is 17,810, and once 18,377 was broken, which is itself a 23.6% retracement of the big move, there was some sort of a jitteriness in the market as far as the sustainability of the trend. And so we have to wait and see whether the bull trend will get reinstated. Now that could not get reinstated, because once it started to fall about 17,810, it should have at least now gone up to 18,360 or 370 levels for us to claim comfortably that we are out of the woods. So that did not happen. And we started to only fall. Now let us look at what is the likely scenario right now. Now the Fibonacci numbers, Fibonacci ratio, the Fibonacci that we have drawn from 16,747 to 18,887 peak. Now that 61.8% retracement is 17,556, and on a close basis it did not go below that, but at the intraday low it was slightly below 17,500 levels or so. So where, if it is going to head towards a slightly lower level, where is it likely to head? 78.5% retracement comes out to 17,195. So 17,200 area is going to be crucial, or anything between 17,550 to 17,200 is going to become a very crucial support levels which we need to watch. So based on this Fibonacci thing, expect the next important support to come closer to 17,200. Now if you look at the trend line, now what we have done is, I will remove this for the time being. So what we've done is we have connected the trend line, connecting the pandemic low with the last important correction low. Now if you draw that trend line, now if you see, now that trend line is coming closer to, just see this line, around 17,300 levels or so. So 17,300, I told you between 17,550 to 17,200. So it looks as if the 17,300 could become the next important support if it's going to go down. So let's look at 17,300 levels from the, now 17,550 has been broken. So we could expect the fall towards the 78.5% retracement at 17,200. Trend line is coming closer to 17,300. So probably we could expect these levels. So between 17.2 to 17.3 is the important support level. Now, if it comes to that level, okay, it would have also probably looked towards the 9 to 10% because the 18,800 it was, right? So normally, first fall takes it around 5.5% from the peak. Then the second one takes it between approximately 8 to 9%, even not 10%, but around 8 to 9%. So if you look at the 18,800 into 8% or so, that also comes to 17,300. So expect that this area should be watched for a next important support level. Now what is going to happen from this? Suppose if it comes to this level, to what extent it can go up immediately? So that is the next one. Now for which we'll go to the chart. We will also look at the moving averages side, but now we are from the trend line side, from Fibonacci side we have looked at it. Now in this correction, in this move, what has been the general correction on the upside? 17,775 to 18,265, approximately a 500 points correction, a 500 points on the upside. So if you are going to get something like a 17,300, then this area itself will provide a big resistance, 17.8, right? So the first expectation is that there could be a fall towards 17.3. So we will have a 17.8, 17.3. So now, right now, let's look at this particular range, 17.3 to 17.8. This probably could be the next range, which is shifted from 17.8 to 18,250. So this range probably now has shifted temporarily to 17.3 to 17.8. Now after dropping down to 17.3, if it starts to go up, then you have to watch for the upside break of 17.8, because that is the important resistance area right now. So once that is the important support, it has been broken now. Because it is broken, that support itself becomes a resistance. So 17.8 will become a very important. So temporarily we will look at between 17.3 to 17.8. What is the worst case scenario in the immediate that we could visualize if the budget is not up to the expectation? Global developments are not good. Adani reports get intensified into some major issue. If that be the case, then what is it that we could expect? Then from the pandemic low, we will draw a 20 Fibonacci. That is from the low of the low pandemic low to the recent high. So we are at, sorry, not this. Okay. From the pandemic low. Now the 23.5% retracement comes to 16,155. So 16,200 approximately, you can take that. So likely worst scenario case for the market could be 16,200, at which the valuation will become too attractive, because at 16,200 you will have the PE going below 20, and we don't expect the PE to go much below 20 based on an estimate of 825 to 835. We expect it to stay closer to 16,700, but 2-3% if it goes on the lower side, and 16 to 16.3 is going to become a very, very attractive scenario for you to invest. So expect that based on all this calculation, we don't expect the 16.7, that is, this is the one, which is 16,750. So 16,750 itself will hold even the worst case scenario. Worst is 16.2. So the first area where we should buy is around closer to 17.2 to 17.3 approximately. The next fall should be 16,800, then 16,200. If all these points come and if you invest, I'm very sure that by the end of the year you will make good amount of money, because even if you look at it, the average return on a year-to-year basis, if you look at the why we are saying this, on an average return in Nifty could be 11 to 12%, right? So this is the average return over a period of time you get. And what the standard deviation that comes, that is plus or minus 14%. That is, sometimes it could swing right up to 1.26 times, that is 26% gain. And then the fall could be up to approximately going down to 90. That is, I don't think so, it's 90 even. Okay, 90, 92 or 93%. Okay, of the previous year. So that means we are expecting that compared to the previous year, okay, year-on-year basis, there is a fall which is around 7 to 8%. Okay, 7 to 8%. That means 18,100. That is 18,100 into 0.93. If you put it, it comes to 16,830. So by year end, very less chance, or 5 to 10% chance that it could be below 16,830. That is only a 10% chance that it could be below 16,830. So you can look towards probable area of investment closer to this place. Almost, I would say, market shifting yourself back almost to 90% equity and 10% cash at this level is a very good combination that you can have, because from there you can get a very substantial gains. Okay, so this is one place where we recommend that we should look towards buying, because even the year before, if you look at it on a basis, so let us say December, we'll take it December 2021. It was okay, it was close was 17,354, 17,354, right? So 17,354 was the last year close. Okay, 17,350 is last year close. Based on this, 17,350 into 0.94, we didn't expect fall, that is the market to close below 16,300. This is the general one. Okay, but what happened? It went up to 15,200 low. So we have a 2,100 points, which was which came down to 12% fall. Now this is a generally it doesn't sustain. Okay, so all those places becomes attractive. So even if you have add 90% at 16,300, okay, and approximately in this place another 5% you should have added. Okay, so 16,300, and from there what happened? You got 18,100. So if you had a cash which is around 16,300, you would have got something like 18,100, which still could have given you something like 12% profit. But probably you would not have done that much, because exactly you might not have waited 17,000, 16,300. So there's a good chance that even if there is a fall, maybe 5 to 6% from this you would have invested. Maybe, yeah, but even a 5% fall from 17,350 to 16,300, right? 16,300. So any 5% fall from the previous year becomes an investable thing, because it gives you some gain. So 5 then becomes 4, 9. So you would have still got 10% in this year, right? Which is better than even an FD. So if from the investment point of view, if there is a fall of more than 5% from the previous year, it becomes a very important place to invest. And if you look at 18,100, okay, now 5% fall is approximately 1,000 points, 17,100. So anything which is below all these things becomes more and more no question of the investment that you can probably look towards doing it. Okay, and the return could be good. Okay, so this is the place where probably we are looking towards some sort of a because suppose if it is going to suppose if you buy at 5% lower than this, and the average return is 12%, okay, and then goes from 18,100, at least 10%, it goes to 20,000 as per the valuation, then you would have got something like a 15% gain this year. 15% gain this year. So 5% from the previous year down. It is a very good place for investment. Now, in this month, we have already told you that we expect that we could probably swing towards the 17,300 to 17,800. This is the first scenario that we are mapping. Okay, but we do not know about the budget, what could happen, all those things. So if there is going to be a bigger fall, then it could be 16,700, and probably you could have some 800 points or 900 points of swing also from here. So probably we could expect 17.5 to 17.6. Okay, so another 5% from this level, because every place that we looking is 17,800 into 0.945, so we make it 16,820 or 16,750. So 16,750 is another place where probably we can look towards. So in this place probably we can look at 17,250 to 300. So the 17,250 to 16,750, if that be the case, then in that case there is a possibility of a swing that could take place. If it goes down to 16,750 for some reason, it could still swing between 16,750 to 17,800. 17,800 approximately. I'm saying it could be, if it is 800 points, it could be 16,750 to 17.6 or 17.6 or 17.7. Okay, 17.6 or so. So we could probably look towards swings which are from the pleasant place. 17,300 to 17,800 is the first scenario. Second scenario could be if the budget is slightly negatively impacted, 16,750 to 17,550 to 17,600. So these are the likely scenarios that could emerge. Okay. Normally we have seen that Nifty, if it breaks 5.5%, that is what we have already shown. Always a 1,000-point swing on either side puts it on this one. See, for example, let's look at the entire chart. Nifty. We will remove the Fibonacci's. So we can see any thousand points of fall or rise. We'll put the daily chart. Okay. So let's look at in the last since last April. Now it started to fall. See this one. It went down to 16,000. 16,824, 17,414, 600 points. Here it is, 15,740, 16,700. That's a 1,000 points thing. That is same thing like 5.5 to 6%, right? So this is one. Then of course, once it started to move 15,183, and then it started to move about 15.8 or 15.9. Okay, it started to move up. Then we have the upside coming there. Okay, then we have the move here from this place. It is around 18,090, and 18,090 we have a fall which is 16,747, 1,250 points. Now once it started to rise, only now if you see 18,880, 18,887, and now it's at 17,780, 1,100 points. So which is approximately the same 5.5% or so, because if you look at 5.5%, 18,880 and 5.5% comes closer to 1,000 to 1,100 points. So this is the place where probably we should be quite cautious of a 1,000-point swing which happens as far as Nifty is concerned. So the next point that could happen is another 500 points from that side. This could be 17.3, then again 16.7 or 16.8. So this is how the trading swing normally takes place in Nifty. So you can buy at 617.3, you can buy at 16.7. Okay, so somewhere you will get some support and it will start moving up. Now we'll look at Bank Nifty. So Bank Nifty, we have drawn the Fibonacci from this place, that is from the last important place, that is the low of the last important correction, that is around 32,290. So we will have the first 38.6% coming closer to 39,598 or 39,600. So 39,600 could be the first place. Then it can look towards, if the last important trend line support is coming at 61.8%, which is 36,797. So possibly we could swing either to the important supports are coming at for Bank Nifty 39,600. Then this is 38.6% retracement. 50% retracement comes at 38,198. $38,200. Then 36,800. 36,800. So these are all the supports where Bank Nifty probably could expect that it could be like this. Now we could see normally the Bank Nifty goes up or goes down by approximately 1,500 points. 1,500 points is a general up to down move. But overall, if it is also going to get 5.5% on the other side, we could see something like 2,200 points swing in Bank Nifty. Now, the first swing that probably we could expect right now is that it broke from 41,331. See, 44,151 to 41,331, which is approximately 3,000 points. So we could still expect a 3,000 points swing as far as Bank Nifty is concerned. We could expect a 3,000 point swing. So the 3,000 point swing could come either from 38,200 or 39,600. So the first thing that we are looking at, 38,200 is the 50% retracement. So 38,200 if it comes, then we could expect the 3,000 points swing. So 41,200. So this is the most favored situation in the coming month. That is 38,200 to 41,200, which is approximately 3,000 point swing, which is around 6 to 7, I think 7% or so. Yeah, 8%, 8 to 9% swing. 8 to 9% swing is there. And generally we have 5%, 5.5 to 6% in Nifty, translate to 7.85 to 8% here. If you look at this, this is also 44,151 and 41,597, right? So this is the first important this one, that is 44,151 minus 43,578. No, sorry. So this is 43. So this is 41,569. This is 2,582, 2,600 points, right? 2,600 points. That is 44,120, 44,120 and 41,600. 44,120, 41,600. This is 2,520 points. So this represents 5.6% or 5.7%. So this is where I'm saying is the most important crucial thing that comes as far as market support is concerned. So we could expect something like a 2,500 points swing. Okay, uh, so the 2,500 points swing from 38. Let us say we said 38,200 plus 25. Okay, this is the likely area where we can get, which is going to be 40,700. So whenever you buy here, probably and some more dip you can also buy. Those things can give you good amount of support. So now we saw the market taking support at 41,620. So as a number we can put 41,620, 2.945. That will comes 39,330. That is where the next support is going to come mostly. Then into zero point 0.9. Yeah, so uh, 38, yes, this 38,200, 38,300, 400 could be the most important supports that can come. So look towards buying closer to this, because that also represents something like a more than 5,000 points correction from the top, 5 to 6,000 points from the top, which uh, which effectively means that we are going to buy something like 12 to 15% from the peak. So essentially that will be a good place where you can start your investment as far as bank nifty is concerned. So in this month what we could probably expect is a swing which is between 38,200 to 40,700. But of course market can change depending on some of the important events that we are only talking about purely from technical point of view. So the caveat is, let us say the budget is good and there are a lot of stops, things turn around, positive sentiments come back, yes, and FOMC goes for only 25 basis point hike, it spurs the market. And let us say the negative impact on Adani stocks get removed due to some reason, then you will have the rally. Now, as the market has fallen, it will not give you, whenever there is a fall, it will not give you a long time to buy, because these are levels where everybody will be looking towards buy. So you should be prepared right now, whether it's Nifty or Bank Nifty, you should trigger your positions immediately, because otherwise, no, next day itself you see Nifty will be up by 300, 400 points, and it looks as if you have missed a move. So if you are an investor, you should not bother about too much about buying on fall. If you are a trader, yes, you should know look towards what are the levels that where probably you should look now. Let us say I would say this market now, where are the short positions that will come? See, this is going to be a very important high. This is going to be an important high. So whenever it retraces something like a 38.6, 50% or 61.8%, we should be looking towards going for on the short side as far as Bank Nifty is concerned, as far as Nifty also is concerned. So for that, which will put the moving average and look at where the moving average stands in terms of moving average. So we look at the 20-day moving average and 20, 50 and 100, 200. So Bank Nifty 20 moving average is coming closer to 40,345. So 40,345 is where we are getting the so 20-day moving average right now is 40,345. So 50-day moving average moving average is coming closer to 42,797. 100 and 200, you will look at it. 100-day moving average, 41,588. So these are all going to be resistance areas in terms of moving averages. And the 20-day moving 200-day moving average for Bank Nifty is so 38,721. So that is where probably the support will come now. That is why we said buy closer to 38, 200 to 500. Sometimes it can go slightly below the 200-day moving average. So anything below 38,720, 721, probably it will look as if the trend is changing. But from there could be some pushback. Okay, going back right up to even 50-day moving average. So you may get a space which could be still 3,000 to 4,000 points on the upside, right? So at least it will go up to this 20-day moving average. So if you buy anything here or slightly below, you still have a chance to get closer to 1,500 to 2,000 points on the upside. So you keep that in mind. Now the same Nifty 200-day moving average is coming 17,300, right? So this is where. So we expect Bank Nifty 200-day moving average is coming closer to 17,300. So that is where we said no, look for a buy. 17,300, and if it goes to 20 or 50-day moving average, is coming much on the upside. So 17,300 looks to be a place where probably you can look towards buying. Okay, and that will also mark approximately a 1,000-point fall from 18,265, which is approximately equal to the same 18,860 to 17,800 approximately. So this place 1:1 fall is also taking place. So a good reason to go for a buy closer to this. Now we look at one or two stocks. Some of the stocks which are falling heavily. Now let's look at ICICI, banking stock. Now ICICI has broken 200-day moving average, right? So ICICI has broken 200-day moving average, and let's look at the moving average and the upside, what probably we could get. So 50-day moving average and the upside, it is coming closer to 900. So chances that it can always spike up to 900 still exists, and 20-day moving average right now is coming for ICICI at 871. So there are multiple resistance areas which are from 871 to 920. So it may not go right up to 920 also, because it's 871, whatever that we got, the recent one. This is we should keep this as an important high right now, 883. So from 883 it is now dropping. So please look always at the Fibonacci of 883 to whatever that comes down. From there, whatever the Fibonacci ratios of 38.2, 50, 61.8 and 78.6. So you can go right up to 78.6 for that. So right now, if the trend is to change for ICICI, it has to cut this low. We will keep it like this. So it has to cut this low, which is the 854. So as long as 854 is not claimed back, or on a close basis 865 or so, I think probably this close is 860. So on a close basis there should be above 860 for ICICI to say that no, for the trend to have bearish trend to have got over. So 860 could be the next important level which we need to watch on the upside. On the downside, of course, we have now we have this 780. So we have approximately a 780 levels. So 780 is the next important level which we could expect. So we could expect ICICI to swing first between 780, 790 to 860. So these are the important levels that we should no look towards on the upside if at all it goes up. So area where probably the first of correction comes let's say from year 958 to this page to 920 38 points it has the first go. Then 958 take a move 875 points 50 points to mid then of course now we have got a move right to 958. So any big up move also has to get even 100 points from this. Which means if it's right. So first we need to get above those 850, 854, just 30 to 40 points from here. That has to first happen. After which we can think about other areas. So the first up move can start only if the move from 958 to 920, which is approximately 40 points. So from here also it has to get above the 40 points up move. 40 points it has to happen, which is 850. Okay, 850 to 853 now. If it falls further to 780, 790, then we should look towards some 810, 820 to be broken, and then for it to move a little bit on the upside towards 850 and then further. So let's wait for all those developments to take place later on. Right now it looks as if ICICI is falling. But if you're an investor, what you should do? If you're an investor, what you should do is that you should buy closer to approximately 18 to 25% fall. So we'll say, let us say 20% fall, 20 to 25% fall from here. 20% fall could mean 190 rupees, right? 958 minus 190. So the first area will support 770. That is what we are saying. So 770 is the first area where we should look towards buy. So okay, 770 or so for investment. If it falls further, another 4 to 5% from the top, so 730. So this is the place where you should look towards investment. You will definitely look towards reaping good amount of profit, at least by 10 to 15% from this. So if you're an investor, I would suggest 770 and 730, where a deeper correction would have emerged of around 20 to 25%, and there you can go for a buy. So that is as far as ICICI is concerned. Now we will look at Reliance, see, because this is one stock which is falling heavily now. And we look at the bigger picture. Reliance. We'll look at the investment potential for this. Now I'll go to the monthly chart. Okay. Now it is fallen below the 20 month moving average. It's coming at 2330 2466. 2466 is that 20 month moving average. It has fallen below that. So if we look at the 50 moving average, in a monthly chart. Now Reliance is coming closer to 1950, 1960. If you look at this, it is coming closer to the 1950, 1960 levels. Right? So 1940, 1950. This is the place. So expect probably closer to 2000. So Reliance is a good investment. So Reliance Industries around 2000. Now it went up to 2850 or so. So from 2850, if you look at a 25% fall, which happens normally, it comes to 2140, 2150. So this is the place where you can look towards investment. Okay, anything between 2150 to 2000 may not, don't need to wait right up to 2000. probably 2150 itself can fit the bill. 2150 itself can fit the bill. But when it moves up on the upside, probably you will have resistance now coming anything between 2450 to 2650. Okay, so because we have seen Reliance moving from 2300 to 2600, 2700, so a 400 points up move we have seen after its fall from 2818. So any 400 points from this place should look towards anything between, this is the range, probably if you buy closer to this is the range. If you buy here, then probably you still have 2000 to 2300 to 2400. Okay. If you buy anywhere up to 2200 to 2150, probably 2600 or so. So I think Reliance on the higher side is going to get capped closer to 25 to 26. On the downside, probable areas are 2150 to 2000, where you can buy and look towards making a 15% profit as far as Reliance is concerned. Now the stocks which are doing well right now in the present circumstances, today Tata Motors did well. Generally Maruti has reported good results. So auto stocks seems to be now getting back the flavor. IT stocks on the defensive side, TCS seems to be all right. So some of these stocks are now become look towards investable because of the performance as far as the results is concerned. But if the market is going to go down, it will have some factor on this. So we should look towards stocks which are falling heavily, which is 20%, 25% from the peak large cap stocks, and look towards investment. Suppose if the stocks have already rallied, let us say Tata Motors has already rallied, there's no point in chasing that particular stock. So we wouldn't recommend it for investment. Investment are things like how we said about Reliance, ICICI, which are falling, and in a couple of percentage points of 5%, 6% from here, definitely we can see a good amount of potential coming back. If not, it may not climb above its previous peak immediately, but there can be a significant rally of 10%, 12%, which will enable you to rotate it, take profits, and then look at some other stocks which are falling a little heavily for you to go. So that's how you can have a trading portfolio which looks like an investment, and you are in a position to beat an investment return. So that is how you have to work smartly to get the result. Now, as I told you, the best thing is you buy in Nifty at around 5 to 6% down from its previous year. You keep adding to that if there is a fall. Good chance that you will see a 10 to 12% gain. When you get on a basis that 12 to 15% gain, probably you look towards exit. Then wait for a fall and then do that. Now similarly, in the case of stocks which have fallen or which are falling to the extent of nearly 20% to 25% from the peak, it is definitely a good place where you can go for investment. Now that's how we will show that even some of the stocks earlier, like for example, let's look at Asian Paints, which is normally a very good stock for investment. So these are all investment grade stocks, and if you see in the last couple of years, this has not given any spectacular gains, but just see the range 3590, 3590, 2560. So approximately 1000 points of fall, which translates approximately to 25% divided by 36, approximately it's at 26-27%. So anything you fall gets some of the stocks around 25% fall, then it becomes a investable thing for a very good company. Now already Asian Paints is down 27 to 27.22. So if it comes closer to the same place, which is 2600 approximately, 2600, so another 100 points, 3-4% fall in Asian Paints definitely will make it investable stock. So another investable stock is Asian Paints at 2600. Asian Paints 2600, and definitely you will get something of a 15% rise in from these levels. Okay, so 2900, 33,000 you will get, and you can make an exit. So Asian Paints is one stock which can be looked towards investment at this particular level. So must identify, probably then you think about stocks which can definitely do well, but looking for a fall and then do, like for example Titan, TVS Motors. Okay, then in banks also you can look at Kotak. Then some of the stocks like Tata Chemicals. Okay, so these stocks will become investable on a bigger fall. So let's look at Kotak, Kotak Bank. So Kotak Mahindra Bank at one stage, let's look at the weekly chart, because whether to see that was only a spike or so. Okay, now let's look at this high or this close, weekly close, which was the 2171. So 2171 and in 2.75, that is 25% fall, becomes 1628, right? So you can just look at this 1631 low. Yes, it closes 1667. So 1713 right now. What is that? 1713. Now closer to the 1620, 1630 you buy. Good chance that it can give you another 15% return from this, because here from this also it went up to 1930, 1940. Even otherwise, if you see from these lows, which was 1672, it went up to 1950. So chances that you will get even a 15 to 20% from this level. Okay, a 15 to 20% rise from this level itself could be expected. So suggest that you can look towards Kotak Bank also, maybe at 1630 or 1650 levels, for a move which could give you something like 1850 or so, 200 points, 10-12% fast you can get. So this is how you should analyze that which are the stocks which are falling, which are now fallen by more than 15% from the peak, and which are the stocks which are fallen by more than 20% from the peak. What if they are large cap stocks? So you put a screener and see, then you can identify those stocks and invest. So, but if you are little bit apprehensive of stocks, you can look at Nifty itself, or sectoral Nifties like Nifty IT. Then you can look at bank Nifty. Okay, then Nifty small cap, Nifty mid cap. So these things are available to you. So you can look at the fall and then take a call and do the investment. So the February movement is expected to be dominated by major developments like the Union Budget, RBI meeting, FOMC meeting, US data. All these things are going to have an impact. So we will also have the Indian GDP of the December period should normally come by January end, but because of budget, maybe it may get a little bit delayed. The announcement can get a little bit delayed. But so that's another important factor. So based on all these things, we should take a call of the events being there. So look more towards investment during this particular period, because trading will have its own pitfalls during this particular period because of the likely volatile swing, and your ability to adapt to that particular swings can be very difficult. So this is a time where you should look for investment. Once some of these events go out, then you will have and also the earnings season is on, so you will get a good idea about it, and then look towards trading. For trading, we have said that the important highs right now seems to be 18,200, and whatever's happening, the fall. So look at the Fibonacci ratios from 18.2 or 18,250 to whatever fall that is taking place, and take the Fibonacci and do the trading based on selling. So right now it looks to be a sell on rally to some extent, and the most important resistance will come closer to 17,800 as far as Nifty is concerned. Okay, so thank you very much. So now any questions, please ask. Thank you. So thanks for your participation, and happy weekend. So we will see next week on Tuesday, and then after the budget we will review the developments due to budget. Okay, thank you very much. Good night, good day.